Good morning, everyone. On behalf of the Entrepreneurship Development Cell of St. Xavier's College Autonomous, Kolkata, I would like to extend our gratitude and offer a warm welcome to one and all present here. We are honored to have with us our professor in charge, Dr. Arup Kumar Mitra. I would request, sir, to welcome the guest speakers.
Thank you. It is my privilege to start this program, EAC online, and I would like to welcome all the guest speakers. I'm really happy that in spite of the scorching heat, this program is on, and of course in online mode. And I believe the students of Entrepreneurship Development Cell will gain immensely from the enlightening speech of the honored speakers. And I would like to hand over the proceedings to the moderator of this particular session, Mr. Ravi Ranjan. Sir, over to you. Thank you very much. All the speakers, thank you for joining.
Thank you so much, Dr. Mitra. Prachi, do you want to quickly introduce the speakers and then I take it ahead? How do you want me to do it?
Sure, sir. Just a second.
Thank you. I can do it as well if you want. I'm just.
Sure, sir. Works either ways.
Perfect. Great. Thanks a lot, everyone. A pleasure to be here. This is my, I don't know which one, but I have been coming to St. Xavier's, Kolkata for various events. Just want to check if my video and audio is good. Good, yes. Right? Okay, perfect. I'm saying that, it has been many sessions that I have been coming to St. Xavier's, Kolkata, a very fine institution, some very amazing students. Also, your alumni network is very powerful. I have a lot of my friends in the entrepreneurship ecosystem who come from St. Xavier's, Kolkata. When I received the call for this event, I wanted this event to join in person, but nevertheless, virtually, we have a better opportunity to meet. As Dr. Mitra said, it has been pretty hot in Kolkata in these days. In the next 60 minutes, however, I'm very sure that all of you would have a great opportunity to listen to the insights of three of the finest VCs from the country who have literally laid the foundation of venture capital investment in the country. Some of the top brands which you know today, which you use every day, were all funded by them when these brands started. In fact, some of the experts have laid foundation for some of the very unique movement in the country. I'll talk more about that when we go into detail. But let me take the opportunity to first introduce our speakers for the day. We have with us Mr. Sanjeev Agarwal, co-founder and general partner of Fundamentum VC. Mr. Agarwal has also founded Helion Venture in India. And before that, Mr. Agarwal was the pioneer of the BPO industry in India when he started Daksh, a wonderful institution which got acquired later by IBM, which led the foundation for the movement which we see today, where India has emerged as not one, but the leader in the BPO and KPO service industry. I would request Mr. Agarwal later on to share some anecdotes from the early days when Daksh was started. But Mr. Agarwal, at this moment, I would like to take this opportunity to welcome you on behalf of St. Xavier's College. Thank you so much for taking our time from your busy schedule. I would request you if you can take 1 minute to just share your welcome note and welcome thoughts, Mr. Agarwal.
No, thank you, Ravi Ranjan, and thank you, St. Xavier's Calcutta. You are a very fine institution, so it's a privilege to be part of this panel. I look forward to engaging with Ravi, Rutvik, and Ravi. Thank you.
Thanks a lot. Really appreciate that, Mr. Agarwal. We have with us Mr. Rutvik Doshi. Mr. Doshi is the MD and general partner of Athera Ventures. Earlier, it was known as Inventus. I have some of my colleagues who are part of the network, and I keep hearing from them what amazing organization Athera has been. Once again, Athera has been the pioneer in the VC ecosystem, invested in some of the very interesting companies in the Indian ecosystem, and would be a delight to hear today about some of those interesting stories. Mr. Doshi, welcome to the event. Glad to have you here.
Thank you so much. So glad to be part of this event, and it's my pleasure.
Thank you so much. Appreciate that. We have with us Mr. Ravinder Pal Singh. He's an Harvard alumni. He's currently a partner at Kalari, where he looks at emerging technologies, deep tech. I was really impressed looking at your profile. You are a pilot. You have flown for Red Cross. During the COVID pandemic, you also built an indigenous ventilator solution, which was inspired to give the power to every common man to build a ventilator. You have worked with some of the best organizations in the world, very enthusiastic about space and aviation technology. I was truly impressed. How have you managed all of that in this lifetime, Ravinder?
No, you are very generous, Ravi. I'm very new to venture capitalism. Sanjeev and Rutvik are stalwarts, and I'm looking forward to learn and interact with them. I'm very, very new to venture capitalism. In a nutshell, I used to be a very, very good engineer. Now only wisdom remains. Skill is going down. I'm 46 now. And yeah, I'm an engineer who can fly an aircraft. I'm an aerospace engineer who can fly an aircraft. So that's, but I'm very, very new to venture capitalism. I'm nowhere even closer to what Sanjeev and Rutvik has achieved. So I'm here to learn from them. Thank you.
Wonderful. I'm very personally very interested in aviation and space, so we'll have some conversation on that. Thanks a lot once again. Let me take this opportunity to quickly introduce myself. My name is Ravi Ranjan. Obviously very, very younger than all of you, both in wisdom and in age. But life has given me very interesting opportunities. I have spent more than a decade working with the Indian startup ecosystem. Now, I started my career with Indian Angel Network, where I was mentored by people like Padmaja, Saurabh, Rajan, Sanjeev, all of them. It was the early days of Indian entrepreneurship. I spent a couple of years at Indian Angel Network managing the incubator and angel network before moving on and helping launch a couple of funds from Europe to India, then moved to Hong Kong, worked with another network. And then from 2014 to 17, I used to run a very interesting program called 10,000 Startup by NASSCOM. During this time, I had an opportunity to work with all the stakeholders, which include government, VCs, startups, and everyone else. Later on, after NASSCOM 10,000 Startup, I started my individual journey as a consultant, worked with various organizations. Interestingly, during the time when I was with NASSCOM, I used to travel across the country, and whenever I get an opportunity, I used to help aspiring entrepreneurs figure out what they're trying to do. In the process, I have the opportunity to train more than 200,000 aspiring entrepreneurs, 20,000 academicians, and 2,000 government officials. I was also part of the team which helped PMO write the Startup India policy. 2018 onwards, as I said, I have been working as a consultant. I again had an opportunity to design a very interesting program called Shark Tank India. So I got all the sharks, got all the framework on how the show should run. I also worked in the public policy field for some time, and then I'm in my personal capacity currently advising the royal family of Dubai, where I scout large companies where they can collaborate with. I also advise a famous cricketer, Shikhar Dhawan. We are setting up $100 million sports tech fund. I also consult with one of the largest early stage investment network called Venture Catalyst Group, which is now almost $1 billion under management. We have 5 different VC funds. But nevertheless, let me start with the first question to Sanjeev ji. Today, the indications are very interesting. I was going through a report which says that out of all the developed and the developing nations in the world, one of the only country which might not go into recession is India. The chances are at 0% at the moment. This has been a report from various research publications published by domestic and international agencies, which is a very interesting sign. It also shows that the GDP of our nation is going to be almost 5.5%. It's a very positive environment we are living in the moment. However, on the other side, there has been a lot of conversation in the VC space where a lot of capital is not coming. VCs are definitely sitting on a lot of dry table at the moment, but obviously the funding has not been as, I would say, fluent and as regular as it was happening in 2020, 2021 and beyond. What would be your insight on this? Do you see it as a momentarily pause? Things will be back again soon, or do you see this challenge getting along a little ahead? I have some second question. Maybe I'll ask that for Ritwik. So this is for you, Sanjay ji. Thank you.
Yeah, no, thank you, Ravi, for a very insightful question. See, if you really look around the world, there are very few countries that are posting growth. So that is one distinguishing factor of our economy. Yet the per capita income is still very low. So there is a huge headroom for growth. And the second thing is that the journey of digitalization is very nascent in our country. If you look across sectors, other than probably with the exception of travel, most other industries are underpenetrated by digitalization. So the long-term perspective of building a digital business in India continues to be very robust. And therefore, there is a very strong reason for capital to be allocated to India. And that is further compounded by the fact that there are issues in China, which was the largest recipient of venture capital in prior years. So a lot of parts of China are not growing now anymore in terms of digital businesses. Good example would be companies like Alibaba and Tencent. And US is fairly saturated in terms of economic growth. So I think India is a very natural destination. And I feel that this lull is a very healthy one, because there were a lot of excesses committed in last 4 or 5 years in terms of building companies which had probably a fairly fragile foundation. It was built on only one principle, which is growth at any cost. And things like customer centricity and culture and profitability had taken backseat. So I think this is ecosystem's way of giving the feedback to entrepreneurs and VCs that we have to build long-term institutions. Only then we will be able to attract capital to this asset class. Because like it or not, this asset class does have low liquidity. So we have to deliver superior than public market returns to be able to attract capital into the country. So I think, as you rightly said, this is a pause. It's not something secular. And gradually, as we begin to find entrepreneurs that are building companies around fundamentals, I think the capital will begin to flow. Even today, the companies which have a path to profitability, which have leadership, which show very strong customer centricity, are able to attract capital. So I think the bar on raising money has certainly gone up, which is good news because it will create more long-term sustainable institutions.
Perfect. Really appreciate that. 2 weeks ago, I was in Kerala for a large event, and that's where I met Mr. Sridhar Vembu from Zoho, along with his co-founder. And I was able to see a stark difference when I meet other founders who are, every founder is great, but when I meet founders who have raised a lot of VC capital from a very early stage compared to a founder who has bootstrapped for a very long time, some of the friends I've met, like people like Deep Turakia, people like, in fact, from Kolkata Fusion Charts, Pallav, Sridhar Vembu, there's a very clear difference you can see in their mentality, in their approach. And recently there has been a lot of conversation if startups have to go back at the fundamental, looking at the building blocks when we are starting up, that listen, why VC money is very, very crucial. It helps you scaling up, but it it cannot be the foundation of everything. You definitely have to bring some of the basics into the in structure when you're trying to take this ahead. We'll move on to the next question, Rutvik. My question to you is, I'm also trying to bring in the fact that we are currently in a college environment where a lot of young people who are eventually going to go and join the workforce, some of them would definitely build a startup venture. As we all know, India has entered into a demographic dividend phase in 2018, which will continue till 2054. A lot of countries have already achieved this in the past, Japan, Russia, etc., etc. By 2025, more than 500 million people in India would be below 30, which is going to be one of the largest workforce in the world. And that's where, our honorable Prime Minister has been again and again saying the Amrit Kal, the golden period, which has just started in India, which is also very clearly visible by technology penetration in various sectors, including fintech, UPI. We see a lot of infrastructure movement going on. My question to you, Ritvik, is for all of young students who are watching us today, live, and who will watch us eventually later, what would be your advice once they finish their college education, let's say higher education, and they are trying to take a plunge into entrepreneurship? What would be your advice from a VC who has invested in some of the largest scalable businesses in India? As a young founder, how do you start building your journey towards entrepreneurship?
So, and Ravi rightly said, so, we in India, we've kind of reached a demographic dividend since 2018. But I would like to also highlight a few more changes that I've observed in my decade-old, journey, or a little more than a decade journey as a venture capitalist. When I started a VC, I would not have imagined, sitting in front of a crowd of so many young college students who aspire to be entrepreneurs, or who are really interested in this whole world of starting up, building something, building companies. And that itself is a massive change that has happened over the last decade. The very fact that we are all sitting and addressing this large crowd of young people who are all aspirational, I think gives me a lot of hope for what is in the future for India. 15 years ago, students coming out of St. Xavier's, Calcutta, or any other college, the number of people who would have been thinking of starting up or being an entrepreneur was very, very small. And today we have such a large group sitting right in front of us. So I think my simple advice to everybody is that, be bold, be fearless. There is a massive opportunity sitting in front of all of us. The way this generation is growing up is fundamentally different from the way their parents did. Sanjeev briefly touched upon that we are in a phase where digitization is just starting up. Travel probably is the only industry where things are penetrated, but everywhere else, everywhere you look around, there's an opportunity. And for all of you young people out there, one of the biggest advantages that you have is that all of you have grown up with technology, unlike your parents or your previous generation. So you and your peers are extremely adapt to it. Technology is the first choice that you will reach out to if you want to solve any problem. And hence, that's where an opportunity gets created. So you will be able to build solutions, create solutions, on things that Sanjeev, me, or Ravi can't even think of, because we did not grow up the same way you did with technology. So be bold, go out there, and whatever idea you may have, just go ahead and execute. The only other thing I would add is that, yes, like how Ravi briefly mentioned a little bit, and Sanjeev also talked, capital cycles keep going through their ups and downs. There will be periods of excess. There will be periods of lull. Don't be deterred by it. Don't think about it. If you are building a business which is going to be sustainable, which over a long period of time can benefit large number of people and have great economics behind it, you will be successful. And I think we are in that golden period, or that Amrit Kal, as they call it. So just be bold and go out there and start up without any fear of failure. If the company doesn't work out, big deal. 2 years later, you can try your hand at some other company, or there are enough jobs available today out there.
Absolutely. Really, really encouraging. I always tell students, because I spend a lot of time with them whenever I get an opportunity, that listen, if you start something in year 1, by year 3 or year 4, typically in engineering, 2 things will happen. Either you'll have a large company where you might need some of your classmates to join your company, or you'll have a better experience on your CV. And when a recruiter looks at your experience of building something, I think you're going to get a better job offer and a better salary package. So there's nothing to lose there.
Absolutely. Absolutely.
Moving on, Ravinder, you have spent a lot of time in technologies. And as I was saying, I love aviation. If ever given a chance, I would have definitely try to become a pilot. I, in fact, have done a couple of training sessions on live aircraft as well. When we talk about aviation, there's very little technology innovation, however, has happened. If you look at everything, right from the flying software to the training to to a lot of things which happen in aviation, commercial aviation, number 1. Number 2, in space aviation, however, things are heating up. What started with SpaceX, today in India, there are companies like Skyroot and Agnikul. In fact, we have invested in Skyroot as well. And we were so, I would say, surprised to see when we opened up the round on our platform, less than 13 minutes, the entire round was closed. And we were receiving messages and calls from people saying that I need a space, I need a table, I need a chair on this spaceship. And we had to apologize to everyone, which shows the enthusiasm that space innovation is just lifting off, and there's so much to happen here. At the same time, a lot of other segments of our life are looking for technology intervention, such as healthcare access. I'm from a very small village in Jharkhand. Incidentally, I'm in my village right now, and I was here for a medical emergency where the nearest hospital was 250 kilometers away. And we had to take the patient in the ambulance, which is a basic ambulance with no life support. And this is my family, where I can afford the best healthcare in the world, but there was nothing I can offer at that point of time. And this is the problem of so many people across the country. In West Bengal, in Sundarbans, every year, hundreds of people die because of various animal attack, and the nearest hospital is again 200 kilometers away. What I'm trying to say is that in our basic requirement, day-to-day life, there's so much technology which can support us to help us solve these problems. What is your take? You have, after spending a lot of time as an engineer, innovator, have joined Kalari, where I'm sure you would be looking at such innovation which can impact deep technology at various levels. What is your take on this, Ravinder? How do you see India moving ahead in innovation, which is going to be designed from India for India, Ravinder?
Thank you, Ravi. First of all, when I was hearing your persona, I think you have more answers than I have, but I'll try. I'll make an attempt to answer, and I'll connect that with whatever little body of work which I have. First of all, I think graduation of India from just services to manufacturing, and I'm talking about large manufacturing, has arrived. Why? If you believe in Amritkal, and in fact, I was with Raksha Mantri last week, and 3 chiefs were there, two in person and virtual. If defense is thinking about entrepreneurship and startups, trust me, large companies and large manufacturing companies are going to be built out of India because of and profitable companies, as Sanjeev mentioned and as Ritvik elaborated on that. And the reason is the complexity of Indian domain and domain which touches the demographics and the aspiration of youth today. That need, which has been there for 2 decades, is hitting West now. They're just feeling the taste of it now, whether it is energy, whether it is space, whether it is aviation, whether it is China plus realization with rare earth free machines, etc., etc. And I think problems which India will solve will become global postulates. That's the first principle of my thesis of investment. I'm a thesis-based investors. Okay. Thank you to Sanjeev as well as to Ritvik for putting travel at my last corporate job. I was founding CTO of Tata Singapore Airlines Vistara. So I'm extremely proud of that. You have 4 questions in build. One is first, so I'll go in the easier one. Aviation in 70s and 80s, if you go by the computational history of aviation in 70s and 80s, almost every core system emerged out of aviation because they were way ahead, including core banking system, which actually came from reservation systems of aviation. And then, as we say today in aviation, that you can't regulate aviation anymore. It is ripe for disruption because no one is happy in aviation. Regulators are not happy, customers are not happy, even employees and organizations are not happy because their balance sheet sucks. So I think it is just about at that particular, when all these 3 things happen, then it is ripe for innovation, so innovation will happen. Space is a different dynamic. Space is a different dynamic because it is thirsty for density and increase of density in LEO. Okay, so LEO has opened up like anything. No industry has opened up in recent era like LEO economy will open up, and right from the unit economics of any communication from space to Earth or within Earth or from cloud to Earth to propulsion engines, which are hydrogen based or which are green, so-called green based. And I think that will lead other industries on Earth. Hence, everyone is interested in LEO. Just the density of LEO is going to exponentially increase in terms of microsatellites, hence communication, hence various industries. For example, just to elaborate on that, for example, if you actually look at not much innovation, frankly, has happened in cybersecurity. And one of the reasons it has not happened is because encryption has been stagnant for a very, very long time, which is getting disrupted in space. Because currently, if you look at space, whether you look at LEO or GEO, there is actually no encryption between 2 satellites. So whatever happens over here will be implemented in space. The congestion in fiber will be solved in space, and so on and so forth. So that's the second point. I'm just elaborating. And also engines have been stagnant. I'm not going to name companies from my portfolio, but if you actually look at the kind of disruption which is happening in 1 kilowatt motor to 80 kilowatt motor, which doesn't uses rare earth metals, is highly impressive. If you look at hydrogen driven engines for large power consuming machines which are happening, it is path breaking, and frankly, it has gone beyond that valley of death where the risk is not that high. Somebody has to build large companies out of it. So and it's all happening in India. Only thing, we all have to scout it, and we have to think beyond just consumer internet and SaaS and so on and so forth, because deep tech companies, though few, are building. Third, which you have mentioned, is my story. I actually, when I was student, and since students are here, I actually sold my cross compiler. My first actually check came, I sold my cross compiler to today, which is world's largest software company. My second check came when I actually sold my encoder to one of the largest entertainment company today. So, but I come from a very humble background, middle class. So look, I could, at the best, I could do a royalty deal, or I can sell my product as well as a patent. I think I totally agree with you. I totally agree with Sanjeev and totally agree with Ritvik. I think time has come to extend that from old, less courageous people, engineers like me, to basically who thrived, and whatever little wealth I have done is through royalty deals, to basically create large companies, because my mindset is still a middle class mindset. But I think students today can create large companies, and we as an ecosystem should support that. Fourth thing, India's time was there long back. Today, today, given the political stability, and if it continues, I think India will emerge. And I don't think capital infusion, I totally agree with Sanjeev. I don't think capital infusion will be an issue. Issue will be creating large quality companies in a time span which this civilization has not seen. So 4 points. Hopefully I've tried to answer 4 of them, Ravi. Thank you.
Absolutely. No, I think it was really amazingly summarized. Thanks a lot. Appreciate that. I move on to the next question. Sanjeev ji, I have a question for you, but before that, let me share a data point. This data point I have collected from Nixie. There are more than 1.2 billion active mobile phones in India today, 860 million broadband connections, 16 GB data is being consumed per user per month, and more than 250 million UPI transactions are happening per day. Truly a very interesting phase for telecommunication and telecommunication-led innovation in 2023. When you started Daksh, I'm assuming it must have not been so easy. Getting a fast broadband connection or a mobile phone, or in fact, convincing the client from the US, North America that, listen, you can outsource your work to us in India, and we are going to give a better job quality at a very, very competitive pricing. I would request you to share a little bit of insight. What was going in your mind as a founder when you started Daksh and when you sold it, and then you went on to start your journey as a VC? Because I want all these students to understand what goes in the mind of a founder when you're trying to build something very, very difficult, which I would say Daksh was when you started way back in the 90s.
No, that's a great question, Ravi. I have almost forgotten what caused us to start Daksh, but I'll try to make a recollection. I think Rutvik made a very good point, which is that given the demographics and the growth in the economy, I was always very comfortable in giving up my job. Actually, I was 40 when I started, and I was a corporate executive. But I always had an urge to do something. But the good news, which I'm sure all the students will take home, is the fact that even if my startup was a failure, there was always a job awaiting me for what I could achieve as an entrepreneur. So that gave me the courage, coming from a middle-class family, like Ravi said, to go and look for a company to be built. And I think the other big advantage that we were leveraging was India's human capital in terms of diversity of talent that we have across all sectors. And third, somebody like General Electric had already set up their back office in the country. So in a way, there was a proof of concept. All we did was we applied that principle in a third-party framework. While GE was running its own captive in India, we said that a lot of corporations, especially new age companies, didn't have the ability to globalize and leverage countries like India. Can we become that platform? So that was one dimension. Second dimension was that information technology had already happened, but we thought that we can apply the same principle of a remote platform to customer service, because this was year 2000 and there was huge growth of communication over the internet, and companies like Amazon were engaging their customers through email. So we said, email being an asynchronous channel, it is less sensitive to quality of telecom networks, which, as you rightly pointed out, were very nascent during that period of time. We had to use satellite, fiber, all kinds of redundancy, last mile, mid mile, to make sure that there is no disruption in the communication channels. So I think applying it to customer service, applying it to email, and then going after early mover companies like Amazon, Yahoo, eBay, all of which became our customers. That is how we were building Daksh. I think some elements were proven. As I said, India was already a very well acknowledged destination. So we didn't have to sell India. India was pre-sold. But we had to sell India for customer service because that was an unknown factor. And I think our first customer was Amazon.com. And when I went to pitch to Amazon's VP of customer service, he said that you must be stupid that we will do this in India. We don't outsource customer service even in US. And for us to outsource it to a third party, which is a nascent company, and in a country like India would be a folly. And we were able to impress upon him that we will take your customer service to the next level if you bring it to India, because the kind of talent pool that we have access to. And within the first season itself, we were able to hit all the metrics that Amazon was looking for. So I think the learning in this entire journey is that the bar for entrepreneurship has certainly been lowered now. It's a lot easier to become an entrepreneur. There is huge India advantage. So we are living in the right country at the right time. And if you can actually find large pain points, then we have very good quality talent, both as entrepreneurs and employees, to build long-term sustainable businesses. Wonderful. So I'm sure that the youngsters in the college will have a lot of inspiration of entrepreneurship that has happened over last 2 decades to think of being a job creator than a job seeker.
Wonderful. Really, really, really amazing, Sanjeevji. Appreciate it. In the interest of time, what I'm going to do is that I'm going to ask multiple questions to all three of you, and we'll try and get as many responses as we can. I'm going to start with the first one to you, Ritvik. If you can quickly, in maybe 1 to 2 minutes, define the investment life cycle. How does it work when you're trying to raise private capital from angels, VCs, family offices, private equity? As an early stage founder, what are the phases and how does it work? Anyone who's starting for the first time.
Got it. So I'll quickly try to explain this, especially for all the young aspiring entrepreneurs out there. So the first step is, I think 2 or maybe 3 of you coming together, exploring an idea, understanding an idea, brainstorming an idea, and getting convinced that this idea is worth giving up everything else or every other opportunity and pursuing it. And that's absolutely the first step which comes in. So it has to come from within. It comes from the conviction that these entrepreneurs have that, let's go ahead and build something. So that's the first step. And once the team of 2 or 3 people have come together, the next step usually is you either seek out some angel investors or what they call pre-seed investors at this in the current terminology, raise certain capital. And at that point in time, what you are largely selling is the idea and also trying to convince the angel investor that we are the best suited today to execute towards this thing. And you start maybe raise a few crores of capital at this point in time, hire your first set of people and start building and executing towards that idea. And so that's literally the first first two steps is, convincing yourself first, and then second is convincing your angel investor or a seed investor to give you some amount of capital to build on top of that. And so that's your starting point. And as you move forward from there, you start going into, there's a whole pipeline of what is known as Series A investment, Series B investment, Series C investment, and growth stage investment after that. So you've taken that angel money, you've taken that seed capital, you hire your first few people, you start building your product, and you get your first set of users who are starting to either use the product or pay for the product or whatever it may be. And you get a sense that, hey, whatever we were working on seems like it's working. Seems like, we need to press the accelerator on this and we can grow faster. And that's when you reach out to some venture capitalists like, myself or Ravi or Sanjeev or many of us are over here and raise your first institutional capital, as they call it. Usually it is in the range of, 15 to 30 crores or 15 to 35 crores. And with that, you start growing your business, you start scaling your business. And that's once you believe in at least what we call in the venture capital and the startup world is what is known as a product market fit and a formula for scaling it, you start raising growth capital. And, Sanjeev from Fundamentum is one of the, the pioneers in homegrown growth capital Series B focused funds. Ravi and myself are more early stage investors out there. And that's the kind of a journey. And eventually, the hope is that you build a sustainable company, which either some potential large company like a Google or a Facebook finds it very, very attractive, and they go ahead and acquire you, or you actually go all the way and take it to an IPO and become public in the markets. So that's how the journey kind of goes through.
Perfect.
Very, very short brief, but that's the short answer.
No, I think that's a pretty good one. I have two questions for you, Sanjeevji. Question number one, Ritvik already kind of laid out the entire path, but there's one fundamental challenge which still exists today. There's not enough risk capital at a very early stage, which goes even before angel. Because in order to get angel investment in India, you need a product, maybe with a little bit of traction, with a little bit of revenue, but a lot of founders don't have that and they're still struggling. There are some accelerators, incubators here and there, but they're not structured. What would be your response to that, number one? And number two, how important is your college name, which college you come from? Because there has been a lot of debate that you need to be from an IIT, IIM, or like an Ivy League to be able to attract tier one VCs. Is that correct? Would love to hear your insights on both the questions.
Maybe I can pick the first one and Ravi can take the second one.
Sure.
So
I had another question for Ravi, more on a technology side, but
Okay. I'll try to then cover both.
Yeah.
So I think, Ravi, the first capital, they say, comes from 3 Fs: friends, family, and fools. So there is always going to be somebody that you know who's willing to provide you with some initial capital. And I think a cold start makes it slightly harder. So I think tapping your network, tapping into your savings, tapping into your family, all these are avenues to get started, to put together a team. And I would also say now the pre-Series A ecosystem is fairly robust. So a lot of high net worth individuals who have built conventional businesses are beginning to write checks directly into companies. So I think that's a very large pool of capital that one can access. So I think more important than raising capital is the quality of plan that you build together and the quality of team that you put together. Because if those things are solving a large problem, then the ability to attract capital becomes a lot easier. So a lot of time should go into preparing for that idea. We spent, for example, almost 6 to 7 months in thinking through. Daksh spoke to a lot of customers prior to our launch, revalidated the pain point, connected with a lot of friends and family to become part of the team. So I think the preparation is very important. Capital will then follow. So that would be my response to your first question. So in summary, it's easier than ever before in our history to raise capital for a digital business, given, as I mentioned earlier, that we are so underpenetrated and the entire world is transitioning to a digital economy. Ravi, what was your second question?
My second question was, how important is your college title, IIT, IIM, Ivy League? Does that become a hindrance when you're trying to raise capital and trying to scale up? If you're not from a tier 1 college, does that become a large challenge?
I think it does help, because what these institutions do, they give you a pretty well screened output. So people who have gone to institutions have very good work ethic. They have very good peer group. When they have to look for co-founders, they have networks. So I would say if you go to a good college, and I would put Xavier's right up there, there is an advantage. But it is not that if you are not from a good college, you can't get the capital. It's just that you have to work that much harder, because you'll be under greater scrutiny, and some of the advantages of access, network that comes with these institutions may not be available to you. So I think, but all kinds of teams get financed. So getting the idea fleshed out in depth, I think will absolutely ensure that you get the audience from right type of investors.
Thanks a lot, Sanjeev. Really appreciate that. Moving on to Ravinder, my question to you. As a founder or as a founding team, if I don't have a CTO or someone who's really good in technology, does that become a large challenge? Can I start without a CTO in place from day one? If I'm not a tech savvy person, can I still do it? Because a lot of people have this challenge, especially I would say St. Xavier's, where most of them are studying commerce or business. They don't have particularly a technology background. So how do I solve this challenge?
The answer, it's a short answer. Answer is, of course, yes. The only caveat I will put is what kind of incubation, entrepreneurship, or a startup you want to do. If you want to create a semiconductor plant with unit economics, which world has not seen. Of course, you need to understand the nitty-gritties of. It doesn't mean that you need to understand the fab, but you need to understand the management of at least some aspects of the fab, how to build it or something like. But answer is, of course, yes. I'm an example. I've been CTO throughout my life. I've been hired by people to build companies, both large and small entrepreneurs. So answer is yes. But for certain things in applied science, I will hesitate to say yes. If you're building an applied engineering, I agree. Any other kind of incubation which is related to services or manufacturing, I agree. But when you're doing applied science, which hasn't taken a root as of now in India like others have taken, then I would be very, very cautious in saying yes. Then it's better to have a CTO or let a technologist do that.
Perfect. Thanks a lot. Moving on, Ritvik, to you. What growth matrix, numbers, revenue, profitability, all of that are pretty generic metrics which all of us look at. But every VC has some other kind of, I would say, markers also, which they internally create that, listen, the founder should be very committed. Ethical is not a compromise. You can't compromise on that. But what you would say as a VC and you as an organization, you look at in founders, what are some of those soft skills which you look at along with the hard skills, which convinces you that, okay, we are going to write a check to this founder?
So you're absolutely right. So Ravi, when we evaluate companies and when we invest in them, there are both a set of hard facts, as you said, revenue growth numbers, profitability, etc. But once we are all convinced on the hard numbers, the soft factors matter a lot more, and especially at the early stages of investments. And in those early stages, the hard numbers are not fully baked in, so the soft has a fairly high weightage to it. Some of the key things that we believe and we look for, one is the founder's ability or the founder's self-conviction in terms of their idea, in terms of their belief in what they're doing. And that self-conviction manifests itself in a variety of ways. That self-conviction manifests in terms of, are you able to sell your story and convince other people to join you at the very, very early stages when you don't necessarily have the money to even pay them the market salary? As Ravi was mentioning that many founders hire CTOs like him, but can you convince a Ravi that come and become a CTO at my organization at 1/4 of your salary because this idea is so great? So that self-conviction manifests itself in that way. The other thing that soft skill that shows up is when you're building something in that space or whatever idea you may have, you sometimes develop very, very deep and unique insights. And those deep and unique insights, sometimes you can never figure it out by reading any report or reading any online blogs or things like that. Those unique and deep insights show up when you know that you've interacted with hundreds of people who are in the ecosystem of that. So for example, since we've taken travel as an example today again and again, if you're building a travel startup, be it something like Redbus, which was in bus ticketing, or be it something like Make My Trip, which was in the airlines or hotels, while you're talking to the VC, your conversation will lead to some of the things which are talking about either the problems of the bus drivers or the problems of the hotel owners, what are the unique challenges that they face, and that's something which is not published anywhere. And you will be able to articulate those and actually come up with a solution for them. So these are some of the soft factors which matter a lot more in terms of also how long the team has been working together. What is the chemistry between the co-founding team? Do they respect each other? Do they give each other the space to explore and build on top of that? So that's how we kind of think through it. These are just some of the small sample, but usually you build these soft factors over a period of time.
Perfect. Really appreciate that. Moving on to you, Sanjeevji. Ritvik spoke about things to look at in founders. What would be some of the red flags which kind of put you at backstage saying that, okay, maybe we have to think again? When you're putting a large check in a company, everything looks good, but then there are some softer aspect which technically you should not be worried about. But as a human being, that's what makes us different. You start thinking that maybe this is not working out well. And because of maybe these soft but very important red flags, we are not going to go ahead with this investment.
Ravi, our focus tends to be more on the strengths of the founder than what they are not. And I think the only thing we want to make sure that there is in a team is complementary skills. And in our parlance, we say it's like Brahma and Vishnu, that there is one person in the team who's forward-looking, who's the creator, and there is the other person who kind of can mind the store. So that becomes a very important component, that is there a visionary and is there an operator coming together in the company, because we have found that magic happens when this pairing happens in an organization. And if you look at all successful entrepreneurs in the country, there will always be a Vishnu sitting somewhere in their team. So for us, a red flag is when there is a visionary, but he doesn't have the ability to execute, because these are two very different skills. And it's very hard for the same person to have both of them. So they are likely to be amplified in different people. Some people are natural strategists and forward thinkers, and some people are very good at getting things done, good project management, review mechanisms, governance. So to us, actually, this would be one of the red flags or one of the reasons to invest, that this team is very wholesome.
Perfect. I'll ask the last question to Ravinder before we kind of start moving towards Q&A. My last question to you, Ravinder, there's a lot of conversation around generative AI, companies like, ChatGPT and many more. I'm why I really love it. I've been using it from second day when it was launched. I get clickbait articles on LinkedIn that, oh, ChatGPT is great, but you're missing out on the top 30 AI innovation. I mean, everyone is trying to take advantage. People are literally putting AI in their decks, and it doesn't matter if it's there or not. But I believe it's a great technology innovation, and things are going to be very different. I would say there are two worlds, one pre-COVID, then post-COVID, and then one world before ChatGPT and after ChatGPT. As a technology, as an innovator expert, and as a VC now, what do you think, how important AI, generative AI is going to play a role in almost all the verticals which is impacting us today as consumer, as investors?
So 8 years back, I actually wrote a paper, codification of emotion, and then I converted that into algorithm, and of course nobody bought it. But so during Tata Singapore Airlines journey, I actually converted that into code. So I wrote a code in which how you can actually mine customers, how you can actually find customers who are not your current customers. So if somebody basically buys, is consistently buying a certain kind of a lifestyle, will they be the business class guys or something? Look, generative AI has been there for a pretty long time. Use cases have been there. By the way, I don't invest in AI companies. AI has to be an element in the overall. So I invest in intelligent. My thesis is of intelligent machines and all this stuff. Generative AI is going to change things because it has been accepted by mainstream, not because it is generative AI. Generative AI has been there for a very, very long time. Frankly, if you ask me, I'll just digress for a few seconds. The biggest change which has happened in the history of computation is that for the first time in the history of computation, economic protocols and technology protocols have been intermingled, which people call as crypto, by the way. Okay, not the crypto which is doing bad, but if you actually look at, that's the biggest revolution which has happened, and all kinds of problems which are there in financial services, mainly starting with lending to anything which is related in manufacturing, which we call as twins or the virtual factories. Everything is related to that. But look, it hasn't. Not many people have built companies out of India. Outside of India, of course, people have built, because people have not accepted that. So how do you accept generative AI to provide intelligence in almost every business domain is something I'm curious. But will I invest just because somebody says that, hey, they have done AI? Well, people have been saying that for a long time. I'm very new to venture capital, but I've been investing for the last 18 years. Okay, I'm new to venture capital, but so I understand. So I don't know. Answer is neither yes nor no. Answer is yes if they are using generative AI to build a business which solves a particular problem, as you mentioned, as Sanjeev ji mentioned, and as Ritvik mentioned. That makes a lot of sense. Generative AI as a tech itself in a mainstream is a very, very welcome thing, because AI has been accepted in its glory, mainstream. Other than that, I don't see it as any kind of disruption. People like me have written tons of code. We have sold tons of code. People have accepted that tons of code. It was not mainstream. It was highly specialized, but a lot of lucrative, juicy M&As have happened, and I have earned. Look, I have got 32 patents, 17 of them are royalty. I'm just doing a disclosure. Out of it, 6 of them are AI patents, 2 of them are generative patents. None of them are recent ones. They are like 14 years, 12 years old. So this is as good an answer I can give.
Wonderful. Really appreciate that. I think we're going to start taking out some questions from startups who are in the audience today. And then we'll try and conclude with one last remarks, which I'll ask all of you. I think we have our first question today from Varun. Varun is the founder of SportTV. The question is, what kind of exit do VCs expect? If I understand it correctly, Varun, do you want to just expand your question a little bit, or we are good to go?
Yeah,
Yes,
I think that's, yeah, hi. Good afternoon, everyone. So my question to everyone was, we've been in talks with different firms. So one biggest challenge I might probably put it across is whenever we are asked for the exit plan, we get a little confusing at times. So I want to hear from the experts as to what kind of exits usually the VCs expect.
So let me take a shot at this the question. So first and foremost, yes, it's a fact that whenever you take money from a venture capitalist, it is like a marriage, but with the predetermined fact that you're going to divorce in 5, 6, 7 years or whatever it may be. So an exit is a necessary thing for taking VC money, because the way VCs invest money is, it's not their capital. They usually take capital from other investors and then make an investment and try to generate a return out of it. And an exit is one mechanism of doing things. However, having said that, and having seen so many startups and so many exits myself, I think it is almost, or at least I have come to conclusion that it is almost impossible to predict the kind of exit that a company may end up having. It is, we've seen companies in our own portfolio and other portfolios where the exit comes from some of the most areas where or the companies which you would have never thought of. So the advice that we give to our founders is that if you are building a company which has long-term prospects, can become fairly large, and can have a sustainable competitive advantage over a long period of times, you will end up creating a company which is either large enough with either strong IP or strong customer base or strong revenue to attract an M&A by some other large player, or just go standalone and become an IPO at some point in time. Hence, my advice to entrepreneurs is always to focus on those 3 things. Think for the long term, build something which is sustainable from an economics perspective, and really think hard about what your long-term sustainable competitive advantage is. And exits will happen automatically over a period of time.
Perfect.
Thank you.
Inviting other founders with your questions, if you have any, you can put down in the chat box, or you can raise your hand and I'll be able to invite you for your questions. Thank you. While we wait for the question, I'm just going to start my concluding thoughts here. So I have similar question for all 3 of you. I would request you to pick up maybe one of your favorite companies from your portfolio and share a little story about how you met the founder for the first time, then you wrote the check, and how things are going ahead. I have picked up my personal favorites from your portfolio, but I would let you do it. Ritwik, how about we start with you?
So my current favorite from the portfolio is a company called Pixel. Ravi was talking about low Earth orbit satellites, etc. So we have a company in our portfolio which is sending satellites up in the sky. We met this set of founders in 2019. So they were graduating from BITS Pilani in 2019, and they were in their final year of college when we first met these set of founders. And while in college, they had done a lot of, playing around, experimentation with what is known as hyperspectral imaging. So you go to this, send a satellite up in the sky and take a picture and take an image and see things which a human eye or normal eye cannot see. So you can figure out the chemical constituents of a lake, for example. And when we met the founders, we were completely blown away by the amount of depth with which they had researched the problem, the amount of depth with which they had researched the solution, the kind of knowledge that they had built in terms of global supply chain. They had spoken to people like SpaceX and ISRO and everybody, and figured out everything else just by the time they graduated from college. And so we wrote a small, very early check from them. And in the last 2 years, they have gone ahead, built satellites, and 3 satellites are up already in the sky. 3 more are going to go up in the next quarter, and eventually going to build a constellation of 24 satellites. And if you'd asked me 5 years ago, I would have never imagined that a company like this will come out of India, and forget India, and will be built by folks who have just graduated fresh out of college. So that was something very, very inspiring and very, very fascinating to see happening.
Wonderful. Ravinder.
I think Aditya has raised the hand if you want.
Oh, okay. Let me bring it up then if we have a question.
Thank you.
Aditya,
Thank you.
Yes.
Yeah, thank you, Ravinder. And firstly, it's been an honor to hear from everyone today. And I'm really sorry I'm having a bandwidth issues. I would have opened up the cam. So what are the investor sentiments when we talk about the Web3 and extended reality in India? I see a huge scope with the numbers and the kind of statistics support this, but just from you and all the panelists here, what kind of trend are we looking at in next 5 years? Thank you.
Wonderful. Ravi, would you like to take this up, please?
I think thank you. Thank you, Aditya. Thank you, Ravi. I think I've already answered that. I think one of the biggest disruption which has happened in computational sciences is for the first time, economic protocols and technology protocols are, and there are huge problems, and large companies are to be built. You can call it crypto, you can call it Web3 or something, or something like that. So of course, tailwinds are in your favor, but there's a lot of, for the lack of word, there's a lot of corruption of thought, which has appeared as it always appears when people don't really know about tech and its implication, which has appeared in Web3, which is mostly in the realms of creator economy. So I keep myself away from that, which is Web2 to Web3 bridges or anything to do with wallets or something like that. But yeah, we have not even scratched the surface in terms of solving problems which current stacks mostly not in the realms of distributed computing, and I hope Web3 and you will be able to solve. So yes.
Thank you very much.
Ravi sir, you are on mute.
Ravi, you are on mute.
Sorry, I was on mute. I was not able to speak. Anyways, I was saying that I see another question in the chat box for Sanjeev about Daksh, but I think Sanjeev has already spoken in length about Daksh and the early stage and how to solve those challenges. So maybe we can skip this one. If any more questions, please do let us know.
So actually, I had a question, if I may go ahead.
Yeah, please go ahead with that.
So I wanted to know, how do you approach investing in companies that are, more inclined towards sustainability issues and environmental practices? Companies whose main goal is not profitability, but rather environmental benefits or climate benefits. So how do you approach investing in those companies?
Okay, any one of you can answer this. Thank you so much.
Let me try. So There are different funds who specialize in some of these things. So there are what we call, there's a whole category of funds which is known as impact funds or climate funds. So climate funds will focus especially in companies which are focusing sustainability and environment and climate. Then there are impact funds, which are slightly more broader. But again, for them also, the goal is not necessarily profits only, but it is a profits plus some other social objective, and which could be employment, which could be education, which could be climate, whatever it may be. So these are very, very special funds. It depends on the structure of the fund, whether to approach it or not. Some of us, I can speak for ourselves, we are very generalist funds. And as a generalist fund, our objective is to maximize return for the investors. And, if it happens to be a climate company, focus company, why not? As long as we can see that it can generate returns. So that's the way we would look at it.
Got it. Thank you very much.
Wonderful. Okay, while we wait for the next question, quickly moving to you, Ravi. One of your favorite from your portfolio, if you might give us a little story around it. Thank you.
I'm curious. What was your company which you liked in the portfolio, Ravi? I can talk about that. I can talk about any of my companies. Yeah.
In your portfolio, you're talking about, I have picked up my. From Kalari, almost everyone is every company is my favorite. Anyone which you can talk about? Let me recollect again. I have one very interesting story for Sanjeev ji. Let me move to Sanjeev ji. Sanjeev ji, you have invested in Spinny. Neeraj is a very dear friend, and Neeraj and me, incidentally, we are from the same village. I'm from a small village in Jharkhand. When I was growing up, my village was the highest Naxal-affected area in the country. I studied from a government school, no access to technology, forget about internet. I used to literally go to a government school, sit on the floor and study. Till the time I graduated, I couldn't speak even English, a word of English. From there on, I have worked really hard to reach here. When I met Neeraj, I said that I have done nothing, what Neeraj has done. Studying from IIT, getting selected at one and then going to another one because he wanted to get another stream, and then building Spinny in a time when there was Car Deco and Cars 24 and everything. And for almost 4 years, nobody was touching Spinny for investment. And then you put money in that at a growth stage. What was that excited you? I would really love to hear that, because that feel like a personal story. When I meet Neeraj, it feels like it's my story. Sanjeev ji, I would love to hear from you about Spinny's story.
I think in one simple word, Neeraj is a missionary entrepreneur who is looking to solve a very large problem and who is looking to build an institution which outlasts him, and who's raising the bar on customer experience. So I think these kind of entrepreneurs are very rare, but once these kind of entrepreneurs meet an interesting problem to solve, they become a fairly straightforward case to invest behind.
Amazing. Really, I can see the visionary talking. I'm going to tell Neeraj about this wonderful interaction. Coming back to you, Ravi, I have so many companies in a portfolio, as I was saying. It's IPL season. Let's pick up Dream 11. At a time when there was no clarity on the regulation, if it's gray, black.
So before you go further, Ravi, Dream 11 is not my company. So I'll let the others. I'll make it simple. Look, my focus and my passion and whatever life is remaining with me, it's all going to incubate deep tech, either through venture capitalism or through institutions in building like IDEX. I'm very proud of what IDEX is doing and what Ministry of Defense and Department of Space is doing. That's my dharma, and all my offshoots of karmas will originate from them. So there's a little bit different approach which I take, which I've learned in my 6 years at Nike's campus in Beaverton, World Campus, working very closely with founder of Nike, Phil Knight. I observed him very carefully. He used to scout for athletes, and that's why he was able to do it at a very, very early stage. It requires tremendous amount of hard work, but he exactly knew the attributes and characteristics and character of somebody who is very, very young, right from the athlete characteristics to the mental or what Rutvik mentioned as soft. That's my passion. So none of the entrepreneurs or who are deep tech entrepreneurs in my portfolio, they have approached me. In fact, I studied them for several months when they were studying or when what they were doing, and I kind of worshipped their concept and their thinking. And frankly, I do worship entrepreneurs because I am not one of them. And then I went to them and then I said, look, I understand your body of work. Hey, you know, I have been operator. I have built things. Will you like to have me as an investor? So before even a phenomena of what we all say as, you know, IC happens in a firm's construct, I really know, and I am in line with the founders. So I don't have a kind of inbound deal flow. I have only deal flow which I scout, and I have my own thesis, and I select only those companies which are going to create large global impact. So I don't look India as a domestic one. I look at something which is in applied engineering, something which is geopolitical secure to a large extent, and something which is future-proof from a scale. So if it doesn't work in Europe, it will definitely work in Africa or something like that. So that's how I do. Ritvik mentioned about Pixel, huge company, man. I'm extremely fascinated, almost like a torch bearer. So many entrepreneurs have come by looking at what has happened with Pixel. Of course, Skyroot has done well in terms of raising a capital, but I'm sure Pixel is going to do tremendously well. Very proud of what as a part of Indian Space Agency, and we are very proud of Pixel. Another company is Digantra. Okay, they are trying to create space situational awareness. Let's see where this company goes. Look, we all started with travel. Traffic management systems are essential. Whether airlines make money or airports make money or not, traffic management systems and owners of traffic management system, that platform always make money. There's no traffic management system, which I call a space situational awareness, in defense or in civil purposes in space today. That's as big a gap as you get, and you can create a very large multi-billion-dollar company if you're able to crack, and if you are able to do that's like large companies like Amadeus or Sita were able to do that. They are billion-dollar companies, in fact more than billion-dollar companies today. So that's how I operate. If that was the essence of the question, Ravi.
Absolutely. You absolutely answered every single point and beyond. With this, I would like to conclude today's session. I would like to once again thank all of you on behalf of St. Xavier's College and on behalf of me, because as I said, as a young boy who started with almost nothing, I saw entrepreneurship as an opportunity to solve problems for myself, for the people around me. And eventually I saw that entrepreneurship is the only possibility through which India can grow as a nation. I'm very proud that I shared the stage with all of you today. I have so many things which I'm going to carry from here on, and I'm sure all the students would have had the same from here on. So thank you so much, everyone. At this moment, I would like to invite the host to take over and conclude the session. Thank you so much.
Thank you, Ravi.
Thank you.
Thank you.
After such an insightful and interactive session, it is an absolute honor and my pleasant duty to propose the vote of thanks on behalf of the Entrepreneurship Development Cell of St. Xavier's College, Autonomous, Kolkata. We have been privileged to have three experts in the field of technology and entrepreneurship, Mr. Ravinder Pal Singh, Mr. Sanjeev Agarwal, and Mr. Rutvik Doshi, share their invigorating perspectives and experiences with us today. A special mention to Mr. Ravi Ranjan for ensuring through his excellent moderation that we all benefited from the wealth of knowledge shared by our panelists. I thank all of you for being present with us today and taking out time from your busy schedules to furnish their bright minds with such practical and broadening perspectives that have enlightened them and shown them revolutionary paths for the future. We are sure that the learnings from this session will act as a guiding light and hold our attendees in good stead for the future. A special mention to our respected principal, Reverend Dr. Dominic Savio SJ, and Vice Principals, Reverend Dr. Joseph Kulindai SJ, Reverend Dr. Peter Arokyam SJ, and Professor Bertrand B. Selva for encouraging us to pursue greatness and live up to the great Xaverian reputation. I would further like to thank our faculty advisor, Dr. Arup Kumar Mitra, for his leading supervision and inspiration at every juncture. We sincerely thank our audience for their attentiveness, participation, and thoughtful questions. Last but not the least, I would like to extend a deep sense of appreciation for all the support, timely implementation, and guidance provided by the members of the Entrepreneurship Development Cell. We owe the success of the session to you. Once again, thank you all for tuning in with EDC. Our next session is the IPR Awareness Program at 2 p.m. Hope to see you all there. Have a pleasant day. Thank you.
Thank you so much.
Thank you for hosting us.
Thank you very much.